Yeah, let's get over to our senior economics reporter, Steve Liesman, now for more on today's jobs report. It was, of course, Steve, a big miss from consensus. I guess Carl had said earlier, 23 years big.
Yeah, one of the biggest in memory, David. And you try to think of a big miss. I mean, the ball was like here, the bat was down there. A lot of head scratching going on as the number not only missed the consensus by one of the largest amounts in memory, but so much of this report, and you have to take this into account, contradicted other trends in the economy. You heard Rick just talk about wholesale sales being up 4.6%. Non-farm payrolls, 266,000 against an estimate of 1 million. Unemployment rate goes up 6.1%, was supposed to go down to 5.8. Average hourly earnings stronger than expected. We did not get the return of lower wage workers. Labor force participation, 61.7%. The data defied the sense that the economy was really about to launch into a new gear in support of the idea that high unemployment benefits and reluctance of workers to return to jobs. This is important either because of what's happening with schools or health concerns. We're holding back employment. But the report itself is an outlier to so much other data showing, for example, jobless claims declining, businesses reopening, and customers returning. Take a look at some of the specifics in the payroll side of the report. Manufacturing down 18,000. Manufacturing is one of the brightest spots in the economy. Retail down 15,000 jobs when the stores are reopening. Couriers down 77,000. That could be part of an adjustment in the economy, but I still find it hard to believe the couriers and messengers are being fired. Government up 48,000. Leisure hospitality, that makes sense. That's coming back big, 331,000. One piece of good news here, the labor force ticked up by 430,000. That brings to nearly 750,000 the number who have come back into the workforce. That's a sign of a strong labor market. So early commentary that I'm getting from Wall Street forecasters, they're expecting better numbers for May, but puzzling over whether some of the factors that have kept workers on the sidelines and practically made hiring difficult for employers might persist, keeping job gains below the gains in the overall economy. Guys?
Well, Steve, that gets to one of the key questions, I guess, and I'll put it to you as we did to Secretary Walsh not that many minutes ago. He didn't answer it, which is this idea that people are getting paid to stay home and are simply not willing to come into the workforce, at least for jobs that don't pay wages that are really equivalent to what they may be getting. Is that true? What do you see in terms of the actual data? Is there a way to know?
Well, I think we were pretty clear that when this idea first came up with the first round of benefits back in the spring of last year, that it was not a factor. Now, things change and things come around and the markets, the job market changes. I think it could very well be a factor. But I don't think it's the only factor. I think there's still health concerns. There's still schools that are virtual. When I look at the Burbio data, I'm seeing only about 2/3 of the schools are back the way they were. And I do think that people are going to take maybe a little more time than they otherwise would to go, maybe not take the first job. Maybe they'll take a second job or wait for higher wages. So there could be some of that. I don't think it's a calamity if people take a couple months to figure it out. If we get here in August, September, when the economy is growing this strongly and people are still on the sidelines, then I would be concerned. But, David, look at that number that I showed you before, if you guys got that chart again, about the labor force. Yeah. It has grown by 750,000. We are drawing people off the sidelines who have dropped out of the workforce and coming back into work. That tick up at the end of the chart there that you see, that's a good sign. We'll have to watch that over time.
Shepard Smith here. Thanks for watching CNBC on YouTube.